And now for his take on the top stories of the morning, Adam Dawes joins us now from Shaw and Partners live in Sydney. Hi Adam, welcome back to Ausbiz. Firstly, can we get your take on Westpac and how it's faring today after the massive fine, which is about 400 million more than the provision that it had set aside?
Yes, good morning, and you're absolutely right. That provision, they only provisioned around $900 million to do that, but the AUSTRAC came in at 1.3 billion. So it is certainly the largest fine in Australian history as far as for the Banking Royal Commission and AUSTRAC. We saw CBA get slapped with a fine of around $700 million. Now that was the biggest, and now obviously Westpac is now coming out with that $1.3 billion. Westpac has agreed to identify and it had three main areas which they talked about, or the cause of those compliance failures, and that was money laundering, counter-terrorism finance, and basically the bank agreed that they did not understand or did not sufficiently understand the risks that were taken on within the company. So it's, look, stock's down about 1.5% today. It's pretty much in line with the market. I think the market probably was expecting around $1 billion, so it is a little bit higher than previously expected. But AUSTRAC has really laid down the gauntlet now. They've really said that we're not going to take any of this stuff anymore, and they are going to continue to keep raising those fines if they see anything going on.
Adam, in the wake of this Westpac news, do you think that's it when it comes to anti-money laundering charges, or are there other skeletons in the closet still yet to emerge? What's your take?
Yeah, I think it's a little bit difficult to say. I mean, you probably think there are some more skeletons in the closet with all of the banks at the moment, but I think this one definitely sort of puts it to bed and gives us a little bit less of an overhang. The market, as I said, was expecting a fine to be quite large. So, you know, if it had been sort of $2 billion, I think that would have been a different story. 1.3 certainly is a fair bit, and certainly one of the largest we've seen. But yeah, potentially the bank does have some more skeletons in the closet, but really the banks have been under a huge amount of pressure, and the share prices are really reflecting that. And there is some value down here, but I think you've got a long way to go before we can see some light of day on the share prices at the moment.
And Adam, we've also seen some results continuing to come out for a couple of companies. Pattison, one of those out today. Net profit down, but its dividend is up on last year. What did you make of those numbers?
So where else are you going to find dividends in this market if the banks aren't paying it? And that's exactly why Pattison has started to rally, or has continued to rally into this result. So as you say, it wasn't a fantastic result. Revenue was $1.3 billion, down around about 15%. Underlying profit was $170 million, which is down 45%. And net profit came in at $953 million. So that was certainly lower than previous corresponding period. But as always, Sols has maintained to the shareholder base that they will maintain that dividend, if not increase that dividend. And that dividend has been increasing for the last sort of 20 or so years. So dividend came in at 35 cents per share, 1 cent above the previous corresponding period. And that's exactly why the market's loving it at the moment. Probably watch it once the dividend has been paid, then you probably might not need to be there so much. But at the moment, where else are we going to find some dividends in a pretty tough market?
I've got an answer, Adam. I think Brickworks can go and pay some dividends, and that's partly because it sold its stake in Washington, sold Pats. What did you make of Brickworks' result? Obviously, some pretty good tailwinds coming through for construction, both in the United States and Australia when it comes to housing.
Yeah, did they sell their stake? Did they? I didn't know that they'd sold that stake. But look, anyway, Washington Soul Pats as well as Brickworks, they do hold a fair bit of each other in that space. So certainly Brickworks raised their dividend despite a 38% fall in net profit due to the coronavirus pandemic, as they sort of said. The Australia's, I guess it is Australia's largest brick maker, reported underlying net profit for the last 12 months around about 146 million compared to around 234 million the previous corresponding period. They did say their North American division is starting to find its feet and starting to move forward, as well as that Australian division also is looking fairly good. But one of the things that we do like about Brickworks is that it has a very large, or has a good holding in Goodman Group. And that Goodman Group is seen as such a surge in e-commerce. That has been a fantastic value add for Brickworks, and that is exactly why Brickworks is doing very well and able to keep that dividend moving forward as also.
Adam Dawes from Shaw and Partners, thank you very much for joining us today and bringing us up to date.